Good morning, viewers. A warm welcome. Sage here. You're watching Kalkine TV live from Sydney, and this is the Global Markets Roundup. And in today's show, we will explore the latest updates from the equity, currency and commodity markets from across the globe. Let us first take a look at Friday's US market performance. The benchmark US indices slipped into the red on Friday, that's July 30th, dragged down by losses in most sectors and closing the trading week on a subdued note. And the US stocks edged higher on Monday on optimism over government infrastructure spending and corporate earnings, even as oil prices slumped on broader macroeconomic fears and the spread of the Delta variant of the coronavirus continues. The MSCI World Equity Index, which tracks shares in 49 countries, gained 0.47%. And while the S&P 500 was down 0.18%, the Dow Jones fell 0.28% and the Nasdaq Composite rose 0.06%. The small cap Russell 2000 was down 0.48%. Stocks saw early gains in Monday's session before edging lower at the close, and the consumer discretionary and healthcare stocks were the top movers on the S&P 500, while the energy and basic materials stocks were the bottom movers, and 8 of the 11 major segments of the index remained in the red. Investors appeared optimistic about the overall pace of the economic recovery, and moreover, the positive quarterly results of companies continued to boost the morale. Earnings of most companies on the S&P 500 could beat analysts' expectations for the June quarter. That helped restore confidence. And investors were also watching the recent slide in the Treasury bond yields, with the 10-year yields declining over 4% and the 30-year yields down by 2%. And meanwhile, the Senate is likely to pass a bipartisan infra spending bill worth about $1 trillion this week. It will be spent on roads, bridges, the internet and other infrastructure projects. Investors would also eagerly wait for the Labor Department's monthly job report. San Francisco-based financial services and digital payments company Square stock jumped more than 13%. In the intraday trading, the company announced to acquire the Australian buy now pay later company Afterpay for $29 billion. The acquisition is expected to give a major jump start to its online payment processing business. And technology company Uber Technologies and pharmaceutical companies Eli Lilly, CVS Health, etc. are expected to report their earnings this week. The results are likely to influence this week's market sentiments. And shares of pharmaceutical and biotechnology corporations Pfizer gained 2.49% and BioNTech gained 3.73% after increasing their COVID vaccine prices in Europe. And the US Food and Drug Administration is expected to give its full approval for the Pfizer-BioNTech COVID vaccine in the coming months. Moderna Inc. also has raised its vaccine prices in Europe, but the stock fell 1.35%. Let's move on now to the bond market. The 30-year Treasury bond yields were down 2.23%, while the 10-year bond yields ticked down as well, 4.85%. The US dollar futures index decreased 0.13%. So this was the latest from the US markets. Now it's time for a short break, but please stay tuned. When I come back, we'll take a look at the European markets. Hi, I'm Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV. Welcome back, viewers. Thank you for joining us. Sage here. You're watching Kalkine TV live from Sydney. And this is the Global Markets Roundup show. So continuing on with the next segment, European stocks ended at a new peak on Monday as increased deal-making activity and a batch of strong financial sector earnings helped markets mark a strong start to August. The Pan-European Stock 600 index rose 0.6%, with retail and technology stocks serving as the best performers, and the major European market indexes are trading in a positive territory on Monday, taking cues from the bounce back in the Asian markets. The German blue chip DAX index is up by 0.06%, while the benchmark index of France, The CAC 40 was up by 0.76%. Germany's 30-year government borrowing costs fell below 0% on Monday, taking the entire yield curve back into negative territory for the first time since early February, as the euro debt markets tracked another leg lower in the US Treasury yields. And Germany's 10-year government bond yield closed at minus 0.48%, down nearly 3 basis points on the day, and the lowest since early February, having already fallen 25 basis points in July. And let's now look at the UK market. FTSE 100 trades in the green zone on the first trading day of the new week, led by the gain in the retail sector stocks like the Next, up by 2.87%, and JD Sports up by 3.81%, as investors anticipate that the opening up of physical stores at the total capacity and ease in restrictions will favour the retail segment, with high household savings during the lockdown period and pent-up demands for the clothing and accessories. And the mid-cap focused FTSE 250 was also up by 1.46%, trading above the 23,000 mark at 23,283. And the merger and acquisitions activity in the mid-cap companies have helped push the index to record levels. So this is how the markets in Europe performed, and it is time now for another short break. But after the break, we'll take a look at the Australian stock market. So stay tuned with Kalkine TV.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google, to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Monday on the Tech Beat, exclusive to Kalkine TV.
Welcome back, viewers. Sage here. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. Let's take a look now at some of the Asian market performance, starting with the Japanese market. Japanese shares ended higher on Monday as upbeat earnings from shippers and other cyclical firms countered the concerns about the fast-spreading Delta coronavirus variant, which threatens a fragile recovery in the economy. The Nikkei average ended 1.82% higher, erasing losses made on Friday when it marked its lowest close since early January. And let's now take a look at the Chinese and the Hong Kong markets as well. Chinese A shares posted their biggest percentage gain since late May on Monday as investors snapped up stocks battered by a sell-off last month despite rising worries around a surge in the new coronavirus cases, and Hong Kong's shares also rose, with the Hang Seng Index ending 1.06% higher after touching its lowest point since early November last week. Chinese H shares listed in Hong Kong finished up 1.12%. And the Shanghai Composite Index finished the day up 1.97%, and the blue chip CSI 300 Index ended 2.55% higher. It was the biggest daily rise since May 25th for both indexes. Let's move on now to the South Korean market. South Korean shares ended higher on Monday, boosted by tech heavyweights on strong domestic export data and solid corporate earnings from the United States. The won was nearly unchanged while the benchmark bond yield rose. And the Kospi closed up 0.65%, rebounding from a sharp 1.24% decline on Friday. And now let's take a look at the markets a little closer to home. The Australian share market is on the lower side on Tuesday, pulled down by the weak commodity prices, while investors await the Reserve Bank of Australia's monetary policy meeting later today. The domestic benchmark index, ASX 200, may open down nearly 0.4% after closing at 1.34% higher on Monday. Treasuries declined following a muted manufacturing data and spread of the coronavirus Delta variant. The dollar fell back toward the one-month lows hit last week after the Fed provided clarity that it may not tighten the monetary policy soon, and as a result, the dollar index fell 0.028% as of Monday afternoon. And now let's take a close look at the futures and commodities market. Crude oil prices edged lower in the overnight trade on weak economic data from China and the US. Concerns were also raised on higher crude output from OPEC producers. As a result, the prices fell nearly 3%, while the Brent settled down 3.3%. US crude shipped 3.6%. And stocks of major energy companies such as Santos and Woodside Petroleum could trade lower on Tuesday. Gold prices edged higher on Monday, supported by a weaker dollar and US bond yields. Spot gold fell 0.1%, while the US gold futures ended up 0.3%. Silver decreased 0.37%, while copper fell 1.13%. Now, the gold miners, including Newcrest Mining and Northern Star Resources, could trade higher on Tuesday. And the benchmark iron ore futures closed 0.9% lower. Copper prices fell as well on Monday on weak factory data from the US and China. The 3-month copper on the London Metal Exchange was down 0.5%. Thanks for joining us on that report. That's all for now. Stay tuned with Kalkine TV for more live market updates. We'll be back with more on the news on the markets, economies and diverse themes and sectors. Sage signing off.